Hey everyone, welcome to our Renter's Guide to Tax Deductions 2022 edition webinar. Today we'll be going over the tax filing basics as a renter, tips on how to maximize your returns, and more, including how to report your investment and crypto gains. Before we get into all this info though, we should quickly introduce ourselves. My name is Curtis and I'm a sales development representative at liv.rent. I've lived in Vancouver all my life and I've worked in real estate for a few years now. And for those of you who aren't already familiar with us, liv.rent is an all-in-one rental platform based in Vancouver and available across Canada. We're committed to helping Canadian renters discover an easier, safer way to rent by connecting them with verified landlords and listings, in addition to a number of features that help you automate and streamline your rental process. I'd also like to welcome my co-host Stela.
Hi everybody, my name is Stela and I am the Business Development Manager at taxpack.com. I've been with taxpack.com team for over 10 years now, and our team of tax experts are dedicated in helping people around the world to file returns and ensure that they're getting their maximum tax refund amount. It's great to meet you everybody, and thanks for having me today.
Thanks for joining us again, Stela. All right, so let's dive in. Today we'll be looking at 3 areas to guide renters with their tax deductions. So part 1 is going to be Tax 101, Basic Tax Principles for Renters. Part 2 is Tax Hacks to get a bigger return, and Part 3 is Tax in the Time of COVID-19. So Part 1 is going to be our intro. We're going to be getting into everything you need to know about your Canadian tax return, including how and when to report your investments and cryptocurrency gains or losses. In Part 2, we'll be looking at tax hacks and secrets that you can use to get a bigger return this year. Things like working from home and some little known ways to get a little more from your return. And finally, in Part 3, we'll be looking at tax in the time of COVID-19. Even though we had last year to get used to some of these new benefits and documents, there's going to be a lot of new information this year as well, so we'll be showing you how to navigate it. Okay, and at the end of the webinar, we're going to be doing a live Q&A. So Stella will be answering any questions you have about filing taxes as a renter and making most of the available deductions. So for the Q&A, make sure to enter your questions in the live chat at any time, and our agents will make sure that we'll get a chance to answer them at the end. The live chat panel is on the right-hand side of your screen. So let's take a look at who we have in our audience today. It looks like 40% of our audience are filing taxes for the first time, and over 10% do not really know their residency status. So Stella, what do you think about our audience today?
Yeah, well, I think we have a great mixture today, and it's great to see that people were interested in finding more information about their tax responsibilities in Canada. Our audience has definitely come to the right place, as we'll be guiding you through your tax planning basics and much more today.
Perfect. And before we dive deeper into the webinar, let's take care of some housekeeping items to help you make the most of your live stream experience with us today. So firstly, remember to turn off your ad blocker. Be sure to make an account so that you can participate in our polls and enter in our giveaway. We'll have more info on that in a bit. And make sure to chat with us. Send any question you have to the live chat and we'll get back to it during the Q&A. And now on to the good stuff. As I mentioned earlier, today's Liv Talk comes with prizes. We'll be giving away a $50 Amazon gift card. Here's how you can win. You can navigate to the giveaway panel on the right side of the live stream, complete the specified actions, and click Submit Entry. Each completed action means an additional raffle entry. So that's right, you can get up to 5 entries in our raffle draw. Make sure you pay attention to the bottom left corner of the screen. Throughout the webinar, there will be a message to enter the raffle. Once again, make sure you click Submit Entry after you complete your actions. You don't want to miss out on any of the prizes. So we're going to be doing a couple of polls. You'll see them pop up too. Let's get to our first one now. How confident are you about doing your own taxes? Let us know with the on-screen poll, and we'll share the results in a bit. And now, Stella, my first question for you is, what is the Canadian tax system like, and what's important to pay attention to?
Great first question, Curtis. Thanks for that. So the Canadian tax system is a progressive one, which means that tax rates increase as an individual's income tax increases too. And there are both federal and provincial tax rates in Canada. You should also know that you can go back 5 years filing taxes in Canada. So in case you have any previous stay or you haven't filed for taxes for 2017 year onwards, now's the time. In Canada, there is also a federal tax-free allowance, or also known as Basic Personal Amount, or BPA, and that's 14,398 Canadian dollars for this year. Something that most people don't know also is that most renters and non-renters in Canada tend to overpay tax each year, which results in a tax refund. So our job here at taxback.com is to make sure that you maximize those tax refunds and never overpay on your taxes. Some common areas people tend to overpay on their taxes are through the obvious one, income tax. There's also overpayment in your Canadian pension plan or CPP and in your employer's insurance.
That makes sense. No one wants to overpay. So that's all. That also helps sets the stage for us to dive a little deeper. One thing I want to point out is the date. So today it's March 15th, 2022. We're right in the heart of tax season right now. Stella, can you explain what tax season is and what are some other important dates to keep in mind?
Oh yeah, so we're definitely in the heart of tax season right now, which is typically when the filing date starts until taxes are due. And here we have some important dates to keep in mind for this year. So first of all, the Canadian tax year runs from January 1st until December 31st. And the tax office officially opens up for filing on February 22nd. The deadline to receive your T4 employment slips and documents is February 28th. So most of you might have received their T4s by now. And the official tax filing deadline is usually April 30th. But this year, due to April 30th falling on Saturday, the deadline has been extended to May 2nd from this hearing. In case you have worked as self-employed or freelancer, you have up to June 15th to file your tax return. In case you end up with a tax bill, you have until May 2nd to pay any amount owed to the CRA too.
Gotcha, that makes sense. Yeah, those are some really important dates to note, and we've prepared this in a digital calendar. Click the link on the screen to sync these important dates and deadlines directly to your calendar app. It'll definitely help you remember that. I know there's a lot of dates I'm trying to keep track of. It also might feel like you have a lot of time to file your taxes, but you really don't. For most of us, everything should be filed by April 30th or May 2nd this year, because April 30th falls on a weekend. Just in case some of us don't make this deadline, is there any penalty if I don't file my taxes by then?
Yeah, so we at taxback.com recommend you file as early as possible to avoid late filing fees and penalties. So late filing fees are only applicable if you have an amount owing to the CRA up to 12-week processing time. And if you owe taxes, if you have a tax bill, you may have a late filing penalty of 5% of the amount owing. And there can be a plus 1% of your balance owing for each month that your tax return is late. This is usually capped at 12 months. So the sooner you file your tax return, the better.
Oh, wow. Yeah, it really makes sense to pay your taxes done on time then. And just so everyone watching knows, we're going to be posting this webinar to our YouTube channel in case you're like me and you know you're going to want to come back and listen to it and catch some of the specific dates and details we've covered. If you forget, you can also download our Renter's Guide to Tax Deductions. Click the link in our live chat or on-screen access to access that for free. All right, so let's get in with our last poll results. Just as a refresher, the first poll question was, how confident are you about doing your own taxes? And the top answer from the audience is, I know enough, but I want to know more. Same. Knowing more is always good. And the second top answer from the audience is, I know what the T4 is, and that's about it. That's completely fair. I feel like that's pretty in line with most people, and that's not a problem at all. So let's get into our second poll, a bit of foreshadowing to what we'll talk about later. Did you invest in the stock market or cryptocurrencies last year? Let us know. We're going to be talking more about investing shortly. In the meantime, we're going to be talking about how your residency status affects your tax return. Stella, I'm curious if you can talk about determining your residency status for tax purposes. What do international students and non-residents need to know about this, and how can they figure out their tax residency status?
Great question. That's very important. So under Canada's tax system, your income tax obligations to Canada are based on your residency status. So first of all, you need to know your residency status before you can know what your tax responsibilities and filing requirements to Canada are. And there are 2 steps in figuring out your residency status. So step number 1 would be to identify your residential ties with Canada. And you'll need to ask yourselves if you have maintained or established significant residential ties to Canada. Those ties can be both primary and secondary. The primary ones consist of having a home, having a spouse or common law partner or dependents in Canada. And the secondary ties consist of owning a personal property, having social ties like joining gym or clubs or unions. Also, if you have economic ties to Canada or a Canadian driver's license, passport, or health insurance within a province or territory in Canada, you might be considered a resident for tax purposes.
Gotcha. And what about step 2?
Yeah, so step 2 would be to identify your residency status and tax implications associated with it. Again, you need to ask yourself some questions. For example, have you recently left, entered, or routinely lived in another country outside Canada? Non-residents usually do not have significant residential ties with Canada and stay in the country for a few months, typically for less than 183 days in the tax year. And residents or deemed residents can have significant residential ties with Canada and may have stayed for more than 103 days in the tax year last year. Also, you need to consider things like your visa type, your intent after your visa expires. Do you plan to return home after your visa expires, or do you intend to apply for permanent residency in Canada? If you answer with yes to the PR, then you possibly can be a resident. One thing to consider also is your social insurance number. So most temporary workers in Canada are usually issued with a social insurance number starting with the number 9. And that indicates to CRA that you're a temporary worker and might be a non-resident for tax purposes.
Oh, that's pretty interesting, the number at the beginning. That clears it up for me. So now that we know exactly what status we're going to be filing with, what do we actually need to file? So Stella, can you quickly go over what exactly renters need to have organized before they do their taxes?
Yeah, sure. So to prepare for filing your taxes, you will need to make sure that you have the following documents available to you. So this is your social insurance number, your T4 documents from each employment last year. Also, if you received any allowances, scholarship, or awards, you need to have a T4A document. If you enrolled in school or paid tuition, you can have a T2202 form. You should also have a copy of your passport or ID in case you have any receipts. Last year, if you made any expenses, you can provide receipts or documents proving your expenses. And lastly, you need to have your entry and exit dates on hand if you left Canada. In case you're still in Canada and don't plan to leave soon, you can just put down an exit date that your visa expires.
Oh, wow. That sounds like quite a bit of stuff, but that does sound manageable. I personally like to have all my things organized and ready to go well ahead of tax season so that I'm extra prepared for when it does come around. The rental process also has a lot of documentation that you need to deal with as well. It's not just your lease. There can be a whole range of documents, letters, credit check reports, and references. So at liv.rent, we've made the whole thing easier by giving renters an application process where all that information is streamlined and in one place. We provide a convenient paperless location for all those important documents you need for renting, like leases and addendums you've signed, and we keep them safe and secure within our chat. liv.rent has a multi-layered security system that's continuously being updated, checked, and tested to make sure we're keeping everyone's data 100% secure. Also, since even your rent payments can be made online, it's super easy to keep an accurate record of your rental history whenever you might need it, like when tax season comes around. And trust me, it works a lot better than a filing folder. I love that I don't have to print or scan any documents or, God forbid, fax any documents. I can just keep them safe and secure in my account, and when I need to share them with a landlord, it only takes a few clicks. We now have standard digital lease agreements for BC and Ontario preloaded with the liv.rent platform, not to mention lease addendums. We've really become an all-in-one solution for all of your renting related documents. And as mentioned earlier, everything on liv.rent is paperless, and that includes post-dated checks. We offer renters the option to pay rent via credit card, Union Pay, and even Bitcoin. So for those of you who did invest in cryptocurrencies last year and made some money, you can pay your rent with that. And maybe we should make something to keep all of your tax organized too. That sounds like a good opportunity for a collaboration. Okay, and more on that, let's take a look at our poll results from earlier. As a quick reminder, the second poll question was, did you invest in the stock market or cryptocurrencies last year? And the top answer from the audience is, yes, I invested in both. And the second top answer is others. And a comment from the live chat is some of you guys didn't invest in either, which makes sense. Yeah, I know that crypto is really becoming a big thing nowadays, and cryptocurrency and the stock market are kind of going hand in hand. I know plenty of us dipped our toes into the stock market for the first time last year, and hopefully even came away with some profit. Well, I hope this isn't news for anyone, but you do have to pay taxes on investment income. And the same goes for cryptocurrency as well, like Bitcoin, for example. Stella, would you like to explain how our renters can report their investment income?
Yeah, for sure, Curtis. So this is actually the new normal right now, and this is definitely going to be a hot topic this year. The big thing to note is that you don't have to pay taxes just for holding securities, and the taxation only happens on the sale. So for the majority of investors, you're going to be reporting your investment transactions as capital gains and losses. But if you're day trading or trading riskier stocks more frequently, you may have to report these as business income. The key difference is that capital gains are only 50% tax, where a business income is fully taxable. And of course, if you're using a registered account like TFSA, RRSP, or RRIF, then you won't be paying any tax on the gross. If you're reporting your investment income as capital gains, you will need to put 50% of that total number on line 12700 on your tax return. And for any investment income, you should receive a T5 slip from your bank financial institution, unless, of course, the investment income is under 50 Canadian dollars. Then the CRA they don't tax income under this amount, so you won't get a T5 slip. And in terms of cryptocurrency, similar rules apply. As long as you're holding, you won't need to worry about paying taxes, but it's still a good idea to keep a record of what you have there. When you sell crypto, you will need to report this on your tax return using the same rules. This can either be a capital gain or a loss, or it can be counted as a business income. As an example, let's take the case of a crypto investor. So let's say we have a person called Alice, and Alice invests $3,000 into various cryptocurrency. She closely watches price fluctuations, actively buying and selling with the intent of profiting. So in 2021, Alice sold $5,000 worth of crypto from her initial $3,000 investment. So she made a profit of $2,000. And since her activities are consistent with day trading, which is considered business, this would have to be reported as business income, which means that the entire amount would be taxable. So for most of you, by now, you should have received a realized gain or loss report from your investment or crypto trading accounts. This report is not an official tax slip. It's provided only for informational purposes, allowing you to calculate the capital gains or loss for each of your dispositions. And if you have such, you will need to report this on Schedule 3 of your tax return or as a business income on the form.
Awesome. Thank you for that. Hopefully this helps all of the budding investors out there. I also wanted to elaborate on what I touched on earlier for anyone who may be new to liv.rent. We offer renters on our platform the flexibility to pay for rent in a number of ways, including cryptocurrency, specifically with Bitcoin. Renters can also pay with the regular stuff like credit cards, Visa, MasterCard, and American Express, as well as UnionPay. We'll also be launching direct deposits soon. To learn more about how to pay rent with Bitcoin, head over to our blog. The link will be in our live chat as well as on the screen. So, Stella, if I'm super disorganized or procrastinating and I feel like, why even bother doing my taxes? Maybe I didn't even make that much money last year in Canada, so what's the point, right? Is it okay to not file your taxes? And can you talk about what happens if we don't?
Yeah, well, unfortunately, it's not okay. You're legally obligated to file and pay your taxes in Canada. it could actually affect your future immigration status. And there is a late filing penalty of 5% if you owe money, plus an interest of 1% for every month that your tax return is late. This is also compounded daily for up to 12 months. So that can quickly add up. And you don't need to leave your taxes behind. Try to see if you're entitled to a refund or have a tax step as soon as possible before the deadline. If you unfortunately end up with a tax bill and you need to pay, don't worry about paying the amount in one go. There are different feasible plans with the CRA. You can just contact them and see if you can pay this in equal installments. And one thing that you should know is that due to COVID-19, there was interest relief introduced on 2020 taxes owing. So this offer ends on April 30th, 2022, and the deadline is fast approaching. If you haven't paid your 2020 tax owing amounts, this is your reminder to do so. If you're looking to get more from your tax refund this year, remember that taxback.com is here to help you. Liv.rent users also save $15, so you can click on the screen or in the live chat to claim that offer now.
Exactly. Why would you leave all that money on the table? Sounds like tax evasion is a bad idea. And just a reminder, you can submit any question you have throughout the webinar in the live chat. During our Q&A session at the end, we're going to answer as many as we can, and there's also our giveaway at the very end, so don't forget that as well. Now that we've covered the basics, though, it's time to get to everyone's favorite section, getting the most out of your tax return. We're going to be looking at some little-known tips, tricks, and secrets renters should be aware of to get the biggest return possible. Okay, so with that, let's dive into tax hacks and secrets that will help you maximize your return. Stella, what are some tax tips you can share with us?
Yeah, well, I have so many to share, but since we're limited on time today, I'll be going over tax tips in the following 5 sections that are often overlooked or forgotten by people. So number 1 would be T2202 or tuition and enrollment certificate form. Number 2 would be expenses. Then we'll be looking at medical expenses. Number 4 is the TD1 form and how to properly complete that form. And finally, we will have a look through the T4 and T4A statements.
Awesome. Let's dive right into the first one then. Stella, can you go over the T2202 tuition and enrollment certificate? Is that just for students, and how can people use it to increase their return?
Yep, so the T2202 form is an official income tax receipt issued by a qualifying educational institution to students for tuition, education, and textbook tax credits. You need to have paid more than $100 in fees to qualify for this tax credit and form. And usually you can get the form downloaded from your college portal, or you can also get in touch with the administration of your educational institution and ask for that form. With this form, you can claim both a federal and provincial tax credit for the tuition amount that you paid last year. And to calculate your tax credit, you can multiply the tuition that you paid by the federal tax rate. So, for example, 15% tax on the first $50,197 of income. If you can't use the entire credit, you can carry over the remaining amount to another tax year. And to find this out, usually if you have a My Account within the CRA website, you can just log in and navigate to go to tax returns on the web page. And then you can click on View Carry Over Amounts. And like I said, that's available on your My Account in CRA.
Okay, great. And what are some of the expenses we can claim to get our tax return bigger and bigger?
Yep, so if you earned over the basic personal amount, or like we mentioned, $14,389 Canadian dollars for this year, then you may be able to claim on the cost of certain expenses to reduce your overall tax liability. So those can include medical expenses, which can be visits to the doctor, prescriptions, and surgery. You can also use your tuition fees as tax credit with the T2202 form. If you made any donations, you can include those into your tax return. If you also paid union dues, or if you had work from home expenses, including rent, supplies, travel, and professional fees, you can claim those. Also, if you had moving expenses, if you had to start a new job or educational program in a different province, you may claim some of the moving expenses you made. If you intend to use expenses to lower your overall tax liability, you will need to ensure that you have proper documentation for each cost. So keep any receipts and any documents you have safe.
Oh, cool. You mentioned medical expenses. Would you mind telling me a bit how we can claim those? Can I claim my massage therapy appointment, for example?
Yeah, well, I don't suppose you can claim that, but usually you can claim medical expenses paid for yourself, your spouse, or common law partner, and certain related persons. So, for example, you can claim doctor's consultations, you can claim nurses' fees, prescription drugs and medications, also premiums paid to private health insurance, and orthodontic work. So, usually medical expenses should be reduced by 3% of your net monthly income, or to 2,421 Canadian dollars, whichever is less. And the tax credit is then 15% of the amount remaining on the expense.
Oh, nice. Thank you for that. That's really good for information to have. Okay, I'm going to run another poll now. Let us know. Are you still working from home or remote learning? Or are you back in the office full-time or part-time? Let us know and we'll share the results once we get into our final section. All right, Stella, what about the TD1 form you mentioned earlier?
Yeah, so the TD1 form is something that most of you might be familiar with. This is a form used to calculate the amount of income tax that would be deducted or withheld from your employment or pension income. And this form must be completed by new employees every time you start a job in Canada. Like we said before, there is a free tax-free allowance in Canada, or personal tax credit, which allows you to earn up to 14,398 Canadian dollars tax-free. And your eligibility for a personal tax credit is calculated on this form, TD form. So you will need to fill this out when you start a new job in Canada, and you must return the form signed to your employers, usually within 7 days. It is your employer's responsibility to provide you with a TD1 form, and you must return the form to your employer. You should also know that they're both provincial and federal TD1 forms. Generally, you only need to complete the federal TD1 form unless you're claiming more than the tax-free allowance. In that case, you must complete a provincial TD1 form, depending on where in Canada you're working, of course. And remember that you don't claim tax credits twice. You always need to read the second page before you complete the first one on the TD1 form. So the TD1 form is very important, and it's vital that you complete this correctly, because this is often the difference between having a tax refund or having a tax bill in the end. As an additional tax tip, I would say that if you're entitled to a personal tax credit, you should only claim them for one of the jobs you have. Usually it's most beneficial to claim the credits for the job that pays the most.
That makes sense. And speaking on that, is everyone eligible to get those personal tax credits that you're talking about?
Well, yeah, it depends on a few things like the 90% rule in Canada. So in Canada, if 90% or more of your total income comes through Canadian sources, you are eligible to claim tax credits on your tax return. To calculate this, you need to ask yourself, when did you arrive in Canada? How much did you earn before arriving in Canada in the same tax year? And how much are you likely to earn in Canada this year? One tax tip that we usually provide is that if you're in doubt, you need to play it safe and you should not claim the tax credit. So in order not to claim this tax credit, you just need to put 0 in box 13 on the TD1 form.
Awesome, that makes sense. And I agree that if you're in doubt, play it safe, or even better, ask a pro for help. Okay, so the last question I have for you before we move on to our final topic, can you talk about the T4 and T4A? I know the T4 is a little bit important.
Yeah, it is. So the T4 slip is a summary of your employment earnings and deductions for the tax year. This employment slip is usually issued before February 22nd, so most of you should have it by now. And you should receive one T4 per employer you had throughout the tax year. The T4A statement, on the other hand, is a statement representing your pension, retirement allowances, and any other type of income received in the year. Like we said, if you're an international student, if you have an award or scholarship from your educational institution, you will have a T4A slip issued by the government. This form is usually issued before March 11th. And if we're to come back to the T4, if anyone has a T4 in front of you, you can see that you have your employer's name on the top left corner of the form. There's also your social insurance number on box 12. There are tax exemptions on box 28, and your tax paid and withholdings are noted on boxes 22, 24, and 26. Finally, you have the tax year that the T4 relates to right in the middle of the page on the top.
What if you can't find your T4 or you don't have one?
Actually, if you're still in Canada, that's not a problem because you can contact your employer and you can ask for a copy of the T4 even before the tax season starts. In some cases, you may be able to use your cumulative payslip because it will show the appropriate information required for your tax filing. And if you're still unable to find your T4 or unable to get a hold of your employer, you can contact us at taxpack.com. We have a document retrieval service and we can source a replacement for you.
That's great. Thanks for those tips, Stella. Hopefully nobody has trouble accessing their T4 or, has misplaced it. But it's great that TaxPack can help you find yours if it is missing. Before we get into our final section, let's check the poll results quickly. And just as a reminder, the question was, are you still working from home or continuing remote learning? And the top answer from the audience is yes, 100% working from home or remote learning. And the second top answer is no, partially back in the office and in-person learning. So yeah, that's pretty interesting. It looks like most of you are still working from home or learning from home, which is great. And I feel like that's going to have a big impact. So that actually brings us into our final section before we head into our Q&A. We're going to be talking about the continued impact of COVID-19 on this year's taxes. Okay, I'm sure we all feel like we're kind of getting used to this new world we find ourselves in, but there's been a ton of changes to how we file taxes as a result of the pandemic. Let's talk a bit about those now. So as I understand it, there are two main things to know about tax and COVID-19. The first is everything related to the CERB, or the Canadian Emergency Response Benefit, the CRB, the Canada Recovery Benefit, and then the second part is the kind of fun, and that's the work from home tax credit, which I think that would save a lot of us money this year. So Stella, can you talk a bit about these COVID-19 benefit programs and what their tax implications are on people filing this year?
Yeah, great. So one thing you should know is that now the CRB and CRB ended last year, so that's no longer available. But if you did receive those benefits at any point during 2021, you will still have to claim them. Employers' insurance, on the other hand, is still active and requires recipients to claim benefits for up to 15 weeks if they're unable to work. All those payments, CRB, CRB, and EI, are subject to regular income tax, and they must be declared as payments as income received on your 2021 tax return. Let's check those closely. So the CRB had no tax withheld towards you just received the full amount of the allowance. And if you had such payment, you will receive a T4A statement from the government, which you need to enclose into your tax return. The CRB should be reported as income earned into your 2021 tax return. On the other hand, the CRB had 10% tax withheld at source, and again, it's reported on a T4A slip by the government. Again, you need to include the CRB's payment into your tax return as income earned, and you should know that there's less tax owed on the CRB versus the CRB because you already paid 10% of the amount in tax.
Gotcha. And what does that mean for people? How much tax do they have to pay?
So the amount of tax owed on your CRB payments is calculated by looking at your total income in Canada for last year. We usually recommend withholding the 20% from the CRV payments and 10% of each CRV or EI payment for tax purposes. Now, the amount of tax owed due to those type of payments can be offset against your tax refund. So if you have anything to claim back as a tax refund, you can simply deduct, the CRA will deduct the amount owed for those allowances from your tax refund amount.
Okay, great. And I know there's a lot of numbers and acronyms being thrown around here. I know I'm a little lost here. So if you have any questions, please put them in our live chat, and we'll come to them at the end of the webinar today during our Q&A. Now, COVID-19 has brought some tax challenges, but it's also brought some opportunities. Stella, can you tell me about the work from home office expenses?
Yeah, perfect. So those type of home office expenses were introduced back in 2020, and most of them came into effect in 2021. And there are two different methods of claiming work from home expenses. So we have the simplified process, which is the flat rate methods, and we also have a traditional detailed process of claiming those expenses. Now, the first one, the simplified process, was available to more individuals working from home last year. And in order to qualify for it, you must have worked from home for more than 50% of the time over a period of at least 4 consecutive weeks in 2021 due to COVID-19. Here, with this method, you can claim $2 per working day, up to a maximum of 500 Canadian dollars for last year. As opposed to that, we have the traditional detailed process where you can include different range of expenses like your rent, portion of your rent, of course, your Wi-Fi, heat supplies, and here you can just claim more than 500 in tax relief, but you will need to have your employer's approval for this. Your employer will need to prepare a form called T2200 or T2200S, and the employer should also sign the form. You need to enclose this into your tax return. Of course, there are some things that you cannot claim as part of your work from home expenses, like you can claim your furniture, replacing windows or flooring, for example, office equipment, or other electronics that you use in your daily life. So not everything is claimable in your tax return, unfortunately.
That's great news. I know a lot of us had to adjust the work from home lifestyle in 2020 and 2021, and all that ergonomic furniture isn't cheap. I know a Herman Miller Aeron, even used, is about $500. So it's nice to know there's some benefits coming our way this year. Okay, and that wraps up the final section of our webinar. Now it's time to hear from you. We're going to be answering questions that everyone pre-submitted before the event and getting to as many questions as possible in our live chat now. One sec while I quickly check that. Okay, so the first question is a pre-submitted question from Ronit, and the question is, can I make a correction if I have made any mistakes while filing last year's taxes?
Yeah, basically you can. So you can request a change to your tax return by amending the amount entered on specific lines of your tax return. You need to file an adjustment. This is what it's called. It's not a new tax return that you need to submit. It's called an adjustment. And generally, you can request this change for a tax year ending in any of the 10 previous calendar years. So if, let's say, you filed through CRA directly as a resident last year and you have a My Account set up, you can go to Change My Return section on the website, and this option will allow you to make an online adjustment for the previous tax returns you submitted. There's also option to refile for residents. This only applies for residents though, and here we have a processing time frame of about 2 weeks. If you're a non-resident, however, and you need to do an adjustment, you will need to complete a paper form T1 adjustment, or it's also known as T1 adjustment request. And here we have a longer processing time because everything is submitted through paper, and the processing time for adjustments is usually 8 weeks. So if you have an adjustment of your tax return, you will need to get a notice of reassessment in the end, confirming or citing the change and the results of the adjustment.
Gotcha. And our second question is also a pre-registration question from Vanessa. Hey, Vanessa, hope you're enjoying the live stream. How can I write off my rental cost of living in my taxes?
Well, generally speaking, you're not able to include rental costs. You can't claim a tax credit for the rent you paid during 2021. There are always, of course, some exceptions to this general rule, but most of those rules apply for residents for tax purposes. Usually, self-employed individuals may be able to claim rent paid on their taxes if they meet certain criteria or if you work entirely from home. And there are also some provinces in Canada that allow rent tax relief into the tax return, but those again are available to residents for tax purposes. And such provinces that offer that tax credit is, for example, Ontario through the Ontario Trillium Benefit, Manitoba, and also Quebec. Non-residents in general can claim part of their rent only if they work from home due to COVID-19 or if they work as self-employed, and they can write this off on their work from home expenses credit.
Gotcha. And the next question is actually pretty interesting. It's from Zoe. Hey, Zoe. The question is, I held a work permit in 2021, became a permanent resident in early 2022. Do I need to file the income for the full year of 2021 or after I stay in Canada for over 183 days?
Yeah, regardless of the stay, she will need to file a tax return, especially if she worked in Canada in 2021, and you'll be legally obligated to file a tax return. Now, depending on your stay and residential ties in the country, you may need to file a non-resident or a resident tax return. If, for example, you already have a new Canadian social insurance number last year, or if you were issued with the Canadian ID before the end of 2021, then you'll need to file as deemed resident for tax purposes. But if you have none of these documents or social insurance number on hand this year, you might need to file as a non-resident. If you'd like, you can just get in touch with taxback.com and we can offer a free assessment for you.
Gotcha. And the next question is from Diana. What kind of tax deductions are available for low-income renters? Are they compatible with EI?
Well, to be honest, that seems to be a question for a resident tax return, which unfortunately I'm not able to help with in details. But as far as I know, low and middle income renters in Ontario province can claim the Ontario Energy and Property Tax Credits, which is part of the Ontario Trillium benefits. Usually those type of tax credits are designed to help low to moderate income earners in Ontario, but I don't want to provide any misleading information here, so feel free to send me an email after the session or just contact taxback.com for an assessment.
For sure. And the next question is from, I don't know how to pronounce this name and I don't want to butcher it. It's spelled UCHE. And the question is, do you have to submit documents pertaining to crypto, options, and other investments and transactions if you made losses?
Well, yeah, the answer would be yes. Gains and losses from buying and selling cryptocurrencies must be reported as part of income when filing your tax return. And for example, if you bought Bitcoin, let's say for $1,000 and sold it for $3,000, you would have made a $2,000 profit of your initial investment, which is your capital gain in the case. And that capital gain would then be taxed at a tax rate of 50%. So the difference would be $2,000 multiplied by 50%, which will result in $1,000. And this will apply as capital gain and should be included into your tax return as an income. On the other hand, if we have a reverse situation where you purchased $3,000 of digital currency and sell it and only received $1,000 in return, then you would report a capital loss. And the difference here would be $2,000 again, multiplied by 50% tax rate. That would be $1,000 that you need to report as capital loss on your tax return. The difference here is that the capital loss can be used as personal tax credits into your tax return, so that can reduce your overall tax liability into your tax return.
That's useful to know. Okay, and our next question is from Bree. Again, sorry if I butchered that. And the question is, I heard that I can file taxes on donations that I made to organizations. I was emailed a tax receipt, but has my nickname on it, not my legal name. Can I still use this document to file for taxes on my donation?
Yeah, so even if it doesn't have your full name on it, you can use this donation receipt and you can enclose it into your tax return. Usually donation expenses can be used as tax credits even if you earn below the basic personal amount. So you can claim those type of donations on line 34900 on the T1 tax return form.
Gotcha. And our next question is from the live chat from Broccoli. Hey, welcome to another Live Talk, Broccoli. And the question is, can we claim anything from a rental situation, like working from home, cost, Wi-Fi, electricity, heat? I don't have all the rent receipts. Is it important that I get them? And it looks like Daniel has already answered this, but I'll let you get onto that.
Yeah, so you may not be able to claim the full amount of your rent because usually you can only claim the portion that relates to your work usage at home. So again, only the part that reflects your working day can be claimable. Again, you can use the simplified method where you can claim $2 per working day up to a maximum of 500. Or if you want to go with the traditional method, then you will need to have your bills, expenses, and you just need to figure out the portion that represents your working from home.
Gosh, that additional info was pretty helpful. Our next question is from Carla. Can I add my parents as a dependent?
No, unfortunately, parents cannot be added as dependents, but if you have a spouse, common law partner, or children, you can claim them as dependents in your Canadian tax return.
Gotcha. And the next question is from Goli, Goli, and the question is, if I have two employers, how should I fill the TD1 forms to have the least tax deductions?
Yeah, so first of all, you need to opt for a personal tax credit only on one of the TD1 forms for the employer. And usually we recommend that you claim the tax credit for the jobs that pays the most. So just opt out for one tax credit on the TD1 form. And the second one you should complete with no and just opt out of the personal tax credit or the BTA.
That makes sense. And this is going to be our last question. The last question is from the live chat from Amy and Cham. The question is, how should I file my tax if I worked as a contract worker? How should I file my tax if I worked as an independent contractor?
Yeah, well, if you work as self-employed, usually you're obligated to file a tax return to report your self-employment income and see if there's any tax you need to pay on this. Again, if 90% of your income is sourced in Canada, you may use the basic personal amount to reduce your taxable income, and you may need to pay tax only on a significantly lower taxable income. If you also have any expenses, you can reduce your taxable income, but feel free to send us an email or contact taxpack.com for a free assessment, and we'll see how much you need to pay in taxes. Usually, if you earn up to $49,000 or $50,000 as income in Canada, you will need to pay 15% tax rate on your income.
Gotcha, that makes sense. And unfortunately, that's all the time we have for questions right now. Thanks to everyone for joining us today and engaging with us in our live chat. Now, without further ado, let's announce the winner of our raffle. Congratulations, Najmeh. I'm sorry if I butchered your name. It's spelled Najmeh. I'm so sorry. I'm bad with names. You are the winner of the $50 Amazon gift card. Our team will reach out to you via email on how to claim your prize. Thank you so much, Stela and the taxpack.com team for joining us in this year's Live Talk webinar on taxes for renters. We'd love to have you back again next year. But in the meantime, Stela, please let the audience know where they can find you and contact with the taxpack.com team.
Thanks, Curtis, and thanks for having me today. So you can connect with me on LinkedIn And you can follow taxpack.com on social media. We're on Instagram, Facebook, Twitter, and TikTok also. And we have a 24/7 live chat service available on our website. So if you're looking for tax filing services, we're here to help and maximize your tax refund amounts. And remember, guys, you can use the $15 discount as an exclusive offer with liv.rent. And all the links will be available in the live chat and on your screens.
That's amazing. Thank you again. And thank you, Daniel, from the taxpack.com team for joining us in the live chat and answering all those questions. Make sure to subscribe to us if you haven't already, as we'll be hosting more live streaming events in the future with more prizes. That's all for now. We'll see you at our next Live Talk webinar. Bye for now.
Bye. Thank you.